Bandhan Nifty Bank Index Fund. Will investing in this NFO help in your wealth creation journey or not? Let us find out through an in-depth analysis in this video. Hi. Welcome to Holistic Investment. We help individual investors like you to take the right financial and investment decisions to reach your financial goals in a more faster and smarter way. Before analyzing whether this will be a good fit for our investment portfolio or not, let us understand and know some basic details about this NFO. Bandhan Nifty Bank Index Fund is an NFO which opens from 8th August 2024 and closes on 22nd August 2024. And some of the key features of this NFO are: this is an open-ended fund type and it has Nifty Bank TRI as its benchmark, and it belongs to the category of equity sectoral banking. And the fund manager for this NFO is Mr. Nimish Sheikh, and the minimum application amount you need to start invest in this fund is just 1000 rupees. According to the riskometer, it has very high risk involved in investing in this fund. And the primary investment objective of this fund is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as it's an index fund. So now, as we have understood a few basic details about this fund, now let us understand a little bit more about the Nifty Bank Index. So the Nifty Bank Index comprises of the most liquid and large Indian banking stock. It provides investors and market intermediaries a benchmark that captures the capital market performance of the Indian bank. The index comprises of maximum 12 companies which are listed on the National Stock Exchange of India (NSE), and this Nifty Bank Index is computed using the free float market capitalization method. And this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. And the top 10 holdings of the Nifty Bank Index are HDFC Bank Limited, ICICI Bank Limited, State Bank of India, Kotak Mahindra Bank Limited, Axis Bank Limited, IndusInd Bank Limited, Federal Bank Limited, Bank of Baroda, Punjab National Bank, AU Small Finance Bank Limited. The top holding in this is the HDFC Bank Limited, by the highest weightage given to it is 27.58%, and the top 10th holding is the AU Small Finance Bank Limited, which has a weightage of 2.08%. And if you look at the graph and the returns as on 31st July 2024, you can see 1 year it has given a return of 13.94%, and in 5 years it has given a return of 12.92%. So since inception it has given 18.93% returns. So compared to short term, in long term it has performed well and given potentially good returns. Now, as we have understood some basic details about this NFO and the index it represents, now let us analyze whether this will be a good fit for our investment portfolio or not. We are going to do that by analyzing the pros and cons of investing in this NFO. So first, let's take a look at the pros, which, as you can see, this NFO invests in a diversified portfolio that are likely to deliver you with long-term growth with minimal volatility. So the diversified portfolio is the top performing banks here, and it invests across various capitalizations. So as this fund is an index fund, if you compare it with an actively managed fund, the returns from this fund are relatively stable with less volatility. So if you are an ultra conservative investor who's not willing to take any risk but still looking to add passive investments to their core equity portfolio, then this might be a suitable fund option for them. So also, as an index fund, it's free from fund manager bias. So as it is managed passively, it is expected to have lower expense ratio than an actively managed mutual fund scheme. So these are some of the pros of investing in this NFO. For the con part, you can see, as this fund invests in predominantly in equities, it is not suitable for a short-term investment, because in short-term market will be highly unpredictable, where it will all of a sudden go through a period of highs and lows. Like you might go through a period of less returns, no returns, even a period of negative returns. For example, long-term could be 7 to 10 years, where the market cycle would also get completed and potentially give you stable and better returns. But in short term, market is highly unpredictable and you do not know how it will perform. You cannot time the market like that because it's highly unpredictable to correctly predict it. So it might not be suitable for a short term investor. If you're looking to invest in it to achieve a short term financial goals, then it might not be suitable to invest in it to achieve that. Also, as an index fund, just because it tries to replicate the index doesn't mean it will not underperform its index due to certain factors. It will also underperform, and this fund will try its best to match the returns the index is giving. So it will not be able to deliver market beating returns. The best it can give is match the returns index is giving. So also, as it is only trying to replicate the index based on the market outlook, the fund also cannot change the allocation dynamic. So as an index fund, you cannot do any analysis of the underlying stocks and check the soundness of the company in which you want to invest. They will only look at how the index is performing in overall view. They will not take an individual analysis into it like active funds, because if you compare it to active funds, they will take a calculated risk by analyzing all the stocks and choosing only the best. They will conduct individual analysis compared to an index fund like this, where they will only look at how the index is performing in overall view rather than conducting individual analysis in each of the stock the index is investing. The major drawback of an index fund investment is tracking error, since it may not perfectly track its index. Also, as it cannot change its allocation dynamically when it's performing, the market is at high or something, it cannot also take any course corrective measures during market crash, during a period of market correction. So it will only try to replicate the index. There is no option to change the allocation in the fund dynamically. What is the final takeaway? Should we invest in this Bandhan Nifty Bank Index Fund or not? This might be suitable for an ultra conservative investor who's not willing to invest in an actively managed fund. If you're not want to take any risk but still want equity investments in your portfolio, then you can choose to invest in a passive investment like this, like an index fund, if you're ultra conservative investor, because it might be suitable for you. But our recommended opinion is there are other similar index funds in the market that have a lower expense ratio and a lower tracking error compared to this NFO. So it's better if you invest in that rather than this. Also, if you're willing to take a little bit more risk, you can also try to invest in an actively managed fund which have the potential to deliver you with higher returns than this fund. Also, if you're an investor who expects dynamic fund management and you look for investments that can beat the market, then you should definitely avoid this fund, because from our analysis it's pretty clear that you cannot expect such kind of dynamic allocation in the fund, and the best it can do as an index fund is replicate the returns the index is representing. So it cannot beat the index itself. So if you're expecting these things from this fund, it's better to avoid investing in this fund. And finally, should you invest in it or not boils down to what kind of investor you are, what kind of time horizon you have for your achievements, and what kind of risk tolerance you have. It all boils down to these factors, and you're still having doubt whether or not this will be a suitable fund option for you, or what will be a suitable fund option for you, and you think you do not have the sufficient time or the knowledge to research to see which will be a better fit for you, you can also consult with a certified financial planner, because a professional like this will definitely help plan your financial planning and your investment journey and make it hassle free and smooth for you. You can definitely collaborate or consult with a professional financial planner to build a better financial future for yourself.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.